Today, we're delving into a pivotal topic that holds the keys to your financial freedom: investing for financial independence. In an era where financial stability and independence are increasingly vital, understanding the role of investments becomes paramount. Financial independence isn't merely about retiring early or becoming extremely wealthy. It's about gaining control over your finances, having the freedom to make choices without being limited by money, and designing a life based on your values and aspirations. Investing serves as the cornerstone of this journey towards financial independence. It's the proactive step that empowers your money to work for you, generating wealth and creating opportunities for a secure future. Throughout this video, we'll explore the foundational principles of investing, unravel the strategies that align with your pursuit of financial independence, and uncover the pitfalls to avoid. Whether you're a novice investor taking your first steps or a seasoned financial enthusiast seeking to refine your approach, this guide will equip you with insights to navigate the realm of investing effectively. Let's dive in. Number 1. Understanding financial independence. Financial independence signifies a state where your income from investments, savings, or passive ventures surpasses your expenses, granting you the freedom to live life on your terms. It's about liberation from the paycheck-to-paycheck cycle and the autonomy to pursue your passions, spend time with loved ones, or engage in endeavors that bring fulfillment. It's crucial to differentiate financial independence from traditional retirement. While retirement often suggests ceasing work entirely, financial independence provides the flexibility to continue working if desired, but on your own terms. It's the ability to choose whether to work, what to work on, and for whom. The journey toward financial independence involves meticulous planning, disciplined saving, and strategic investment. It's about establishing a financial fortress that can weather life's uncertainties, granting peace of mind during both prosperous and challenging times. Achieving financial independence isn't a race. It's a personalized expedition. It involves defining your unique goals, crafting a robust financial plan, and consistently executing steps towards those goals. Number 2. Basics of investing. Investing serves as the engine powering the journey towards financial independence. It involves deploying funds into various financial instruments with the aim of generating returns or profits over time. Understanding the basics of investing is pivotal to make informed decisions and grow your wealth effectively. At its core, investing revolves around deploying capital into assets such as stocks, bonds, real estate, mutual funds, or other vehicles, aiming to generate income or appreciate in value over time. Each investment avenue carries its own risk and return profile, catering to different investment objectives and risk tolerances. One crucial aspect of investing is comprehending the risk-return relationship. Generally, higher returns are associated with higher risks. However, a balanced and diversified investment portfolio can help mitigate risk while potentially optimizing returns. Diversification, often deemed the cornerstone of investment, involves spreading your investments across various asset classes and industries. This strategy helps cushion the impact of a downturn in any single investment, reducing overall portfolio volatility. Number 3. Steps to start investing for financial independence. Setting financial goals. Begin by defining clear and achievable financial objectives. These goals will serve as the guiding force behind your investment strategy, shaping the path towards financial independence. Budgeting and saving. Develop a budget that allocates a portion of your income specifically for investing. Saving diligently ensures a consistent flow of funds available for investment, a critical step in the journey towards financial freedom. Understanding risk and return. Assess your risk tolerance and understand the relationship between risk and potential returns. This self-awareness will aid in selecting investments that align with your comfort level and long-term objectives. Selecting investment vehicles. Research and choose investment vehicles that suit your risk profile and financial goals. Options range from stocks, bonds, index funds, ETFs, to real estate. Consider factors like liquidity, time horizon, and diversification when making choices. Long-term perspective. Adopt a patient and long-term approach to investing. Financial independence isn't an overnight achievement but a gradual process. Consistency and discipline in your investment strategy are key to reaping the benefits over time. Remember, the key lies in persistence, prudent decision-making, and adapting your strategy as you progress towards your financial goals. This proactive approach ensures you're on the right track to achieve financial freedom. Number 4. Managing and mitigating risks. Investing for financial independence involves navigating various risks inherent in the financial markets. Understanding and effectively managing these risks is crucial for safeguarding your investments and ensuring long-term success. Risk assessment. Begin by identifying and comprehending the different types of investment risks such as market volatility, inflation, liquidity, and specific asset risks. Assess how these risks might impact your investment portfolio. Diversification. Spread your investments across different asset classes, industries, and geographic regions. Diversification helps reduce the overall risk exposure of your portfolio. A well-diversified portfolio tends to be less susceptible to the fluctuations of any single investment. Asset allocation. Allocate your investments strategically across various asset classes based on your risk tolerance and financial goals. Adjusting the balance between stocks, bonds, and other assets can help manage risk while aiming for growth. Continuous monitoring and rebalancing. Regularly review your portfolio to ensure it aligns with your investment objectives. Rebalance your portfolio periodically to maintain the desired asset allocation, especially after market fluctuations or life changes. Emergency fund and insurance. Establish an emergency fund to cover unforeseen expenses, reducing the need to dip into investments during emergencies. Additionally, having adequate insurance coverage protects your assets from unexpected events. By employing these risk management strategies, you not only protect your investments but also create a more resilient and stable financial foundation on your path to achieving financial independence. Remember, risk is inherent in investing, but prudent risk management can significantly mitigate its impact. Number 5. Common mistakes to avoid. Navigating the investment landscape can be complex, and avoiding common pitfalls is crucial on the path to financial independence. Recognizing and steering clear of these mistakes can significantly impact the success of your investment journey. Overtrading and market timing. Many investors fall into the trap of excessively buying and selling investments based on short-term market movements or attempting to time the market. This often leads to higher transaction costs and reduced returns. Lack of diversification. Failing to diversify adequately across various asset classes can expose your portfolio to unnecessary risks. Concentrating investments in one area may lead to significant losses if that sector experiences a downturn. Emotional decision-making. Allowing emotions to drive investment decisions, such as panic selling during market downturns or overconfidence during bull markets, often results in suboptimal outcomes. Ignoring fees and expenses, and neglecting to consider the impact of fees, commissions, or expense ratios on investment returns can erode the overall performance of your portfolio over time. By being mindful of these mistakes, investors can make more informed decisions, enhance their investment strategies, and fortify their path toward financial independence. Remember, financial independence isn't solely about reaching a specific monetary milestone but about gaining control over your future. Start today, stay committed to your goals, and continuously educate yourself. Your proactive approach to investing sets the stage for a future empowered by financial stability, flexibility, and the freedom to pursue the life you desire. Begin your journey towards financial independence today.